Aaron Regent is the president and CEO of Barrick Gold, which is the world's biggest gold miner. Aaron, thanks for being here. Appreciate it.
Thank you.
Just looking at your numbers, I mean, they're pretty impressive, churning out 8 million ounces of gold a year. I think you have 140 million ounces in proven and probable reserves. What are you seeing in terms of this run-up in gold prices? How is it affecting your company and just the sector in general?
Well, clearly the higher gold prices is a good thing for our business. Our revenues are up quite nicely. We've seen significant margin expansion in our business. I think the gold price year to date is up around 26-27%, but our margins are up over 50%. And as a result, we've had record profitability and cash flow. So from a financial perspective, we clearly are one of the major beneficiaries of the rise in the gold price.
I would assume you're always on the lookout for reserves, proven reserves, where your next mining locations will be. What are some of the most promising locations right now, would you say, Aaron, where you haven't necessarily started digging, but you're looking at it very seriously?
Maybe an indication of where our focus is where our exploration dollars are going. And, right now we spend close to $200 million a year. In fact, we'll probably be increasing that into 2011. And a big chunk of that goes to the United States in Nevada, probably about 40 to 45%. So I think it kind of reflects our view, at least, of the potential to find new mines in Nevada. And in fact, this year, we re-looked at one of our existing mines and how we might be able to expand that in a significant way. It's called Turquoise Ridge. And that could be a multi-billion-dollar investment and creating, obviously, hundreds of jobs, thousands of jobs during construction, but hundreds of jobs once that mine gets going.
When you do find a new location not existing and you do go for it, if you will, what does it take in terms of equipment, land, labor, infrastructure? We know 7 to 10 years. What kind of money has to be poured into that?
It really depends on the type of deposit and, as you point out, where it's located. You take Cortez, which is in Nevada, the latest mine we've just completed construction and ramped up this year. That was roughly about a $500 million investment. But that was relatively low because we have a lot of infrastructure already in place. We're able to leverage off of that. But in our portfolio, we're constructing 2 other mines right now, one in the Dominican Republic, which is a $3 billion investment. Another one, which is in South America, which straddles the border between Chile and Argentina, Pascua-Lama. That's a $3 billion investment. And then in our pipeline, we have another project in Chile, which is over $4 billion, and a project up in Alaska called Donlin Creek, which is also over $4 billion.
We have heard from gold traders around the world where they think, Aaron, the price of gold is going. What's your call on where you think gold specifically is going in the near term and in the long term? Because obviously you're planning the way your company operates partly around that.
No, that is true. In terms of how we plan, we tend to use a price which is a discount off of spot prices. So we take a conservative approach in terms of how we plan. And I sort of have said repeatedly that if we're wrong on the upside, that's great. We've got more cash. But if you're wrong on the downside, you got to work that much harder. But that being said, we are pretty positive about the outlook for gold and metals in general. And gold really is reasserting itself as a global monetary and financial asset. And you can see that being directly the case when central banks around the world have been increasing their purchases of gold, whereas for decades they've been net sellers.
Any countries in particular that you've noticed stockpiling?
Well, the countries that have been significant purchasers of gold, particularly from a physical perspective, have been emerging or Asian economies like India and China in particular. India, for example, is a big buyer of gold. And China, in fact, has really increased its consumption of gold over the last year. In fact, their imports year-to-date are up 5 times compared to last year. So those are 2 regions that have really increased the purchase of gold. But generally speaking, gold really goes into either jewelry demand or investment demand. And the there's been a shift a little bit away from jewelry demand into investment demand. And that's partly been aided by the role of central banks.